welcome back to discuss investment banking. We're dealing with module 6 today, investment banks around the world. Investment banking is a global industry that connects capital, institutions, and investors across countries. It plays a central role in facilitating cross-border transactions, enabling international investment, and supporting economic development in both developed and emerging markets. By way of module objectives, by the end of this module, students should be able to explain the global nature of investment banking and its role in international finance, identify key investment banking institutions across global regions, compare investment banking structures in developed and emerging markets, understand how regulatory environments influence investment banking activities, analyze the role of investment banks in different economic contexts, explain how global investment banking networks facilitate cross-border transactions, evaluate differences in capital market development across regions, understand the challenge and opportunities in emerging markets in investment banking, and assess the importance of international capital flows in global financial systems. By way of introduction, investment banking operates across multiple jurisdictions, linking capital from surplus regions to areas where it's needed. This global integration makes it essential to international finance and economic development. Although core functions remain the same globally, differences in economic development, regulation, and market maturity leads to variation in how investment banking operates across regions. Developed markets such as the US and UK have deep capital markets and advanced systems, while emerging markets offer growth opportunities but come with higher risk and structural limitations. Let's look at the global nature of investment banking. Investment banking forms a networked global system where financial activities in one region can influence the markets worldwide. This interconnected increases efficiency but also introduces systemic risk. Let's look at the investment banking in Nigeria sector or the Nigeria economy. In the Nigeria economy, investment banking operates within a developing financial systems regulated by the Central Bank of Nigeria and the Security Exchange Commission. It supports capital formation through equity and debt issuance but faces challenges such as limited liquidity and currency volatility. Investment banking in Ghana. Ghana sector is smaller but stable, with institutions facing bond issuance and advisory services. Political stability also enhances investor confidence, though liquidity remains limited in Ghana. Let's look at investment banking in the United States. The US has the most advanced investment banking system, with deep liquidity, strong regulation, and global institutions like Goldman Sachs and JP Morgan driving large-scale transactions. Let's look at investment banking in the United Kingdom. London is a global financial hub connecting multiple regions. Strong regulation and international focus make the UK a key player in global investment banking. What about in the EU? The EU integrates multiple markets with coordinated regulations. Institutions like the Deutsche Bank and PNB Paribas facilitate cross-border capital flows within and beyond Europe. Let's look at investment banking in South Africa. South Africa has the most developed markets in Africa, supported by the Johannesburg Stock Exchange. It serves as a gateway for investment into the continent despite the economic challenges. Let's look at investment banking in Kenya. Kenya is an emerging financial hub in East Africa, driven by economic growth and financial technology, even though it still faces liquidity and regulatory challenges. What about in Australia? Investment banking in Australia is stable with strong regulation. Investment banks are active in infrastructure and natural resources financing. Let's look at investment banking in Canada. Canada's systems is closely linked to the US with strong institutions focusing on sectors like energy and infrastructure supported by stable regulations. Now let's have a comparative perspective. Developed markets have high liquidity. That means it can be easily sold. Assets can be easily sold. Advanced instruments and strong regulation. While emerging markets offer growth but face structural and risk challenges. Let's look at the leading global investment banks. Global institutions such as Goldman Sachs, JP Morgan, Morgan Stanley, Barclays, and HSBC dominate financial markets and influence capital flows worldwide. Let's look at the nature of global banks. Global banks operate at scale with global networks, strong capital bases, and advanced technology, enabling them handle complex transactions. Now, what is the role of global investment banks? Their role is to connect investors and issuers, underwrite securities, provide advisory services, and facilitate cross-border transactions for global markets. What are some of the competitive advantages of global investment banks? Some of the key advantages include scale, global reach, expertise, access to information, and strong reputation, which enable them to dominate global finance. The activities we have influence on financial system. What is their influence? The activities affect capital allocation, corporate strategy, and market liquidity. They also drive innovation or can contribute to systemic risk. What are some of the criticisms and limitations? Concerns include excessive risk trading, conflict of interest, and market dominance, highlighting the need for strong regulations. Now let's look at the comparison between developed and emerging markets. Developed markets have sophisticated system, deep liquidity, and strong regulation, while emerging markets have growth potential but face higher risk and limited market depth. Some of the features of developed markets, we have one, high liquidity, advanced instruments, strong regulations, large institutional investors supporting efficient capital allocation and large transactions. While for emerging markets, we have li- limited liquidity, simpler instruments, evolving regulations, and reliance on foreign investments. Now, what is the implications for practice? Investment banks in developed markets focus on complex deals, while those in emerging markets must adapt strategy, manage risk, and build relationships. Let's look at global investment banking networks. Investment banks operate through interconnected global networks, combining physical presence, partnerships, and digital systems to coordinate international transactions. Let's look at the cross-border advisory services carried out by global investment banks. They provide advisory on international deals, including merger and acquisition, capital raising, and foreign direct investment, ensuring compliance with multiple regulatory systems. Let's look at cross-border capital flow carried out by global investment banks. Capital moves across countries through portfolio investments, foreign direct investment, and international debt issuance, facilitated by investment banks. Risk management in global finance. Investment banks manage currency, political, regulatory, and economic risk using hedging strategies and financial instruments. What is the importance of integrating globally? Global integration improves capital allocation, expands market access, and promotes innovation, but increases systemic risk exposure. Some of the challenges in global networks include regulatory differences, geopolitical risk, and cultural variations that complicate international transactions. Now, what role does technology play in all this? Technology enables real time coordination, data analysis, and efficient global operations, improving decision making and risk management. What is the strategic importance? Global investment banking networks provide access to opportunities, diversify revenue, and enhance competitive advantage for investors. By way of conclusion, this module has provided a comprehensive examination of investment banking within a global context, emphasizing the diversity, complexity, and interconnectedness of financial systems across different regions. It has demonstrated that while the core functions of investment banking remain consistent, such as capital raising, advisory services, and financial intermediation, the structure and operations of these activities vary significantly depending on the level of economic and financial development. There's an assessment at the end of this module where there's 15 quiz questions and a global analysis report that will test your knowledge on the module. I will see you in module 7.